Welcome to Trevisa Financial. Trevisa Financial is a purpose-driven wholesale lender. We're not your average wholesale lender. We're a team on a mission to help you open more doors.
Is offer products to home buyers that otherwise would not be able to get into a home. And there's so many.
Reach more families and redefine what's possible for first-time homebuyers, especially underserved communities.
Having diverse lending products opens doors for folks that otherwise might not have access. And so it's understanding different cultures, it's understanding different backgrounds, and the fact that you might not have had the opportunities that others have had, but there's still a way for you to get into homeownership. And so understanding that those different backgrounds exist.
At Trevisa Financial, we believe homeownership is more than just a transaction. It's transformation. It's the foundation for building wealth, stability, and legacy. Together with borrowers, we're committed to making that transformation real. Through education, transparency, and heart, we help more families step confidently into homeownership.
It seems so much further away that it's more important today to focus on this affordable lending issue, right? Or the affordable lending challenge to get people into homes.
Because when you know better, you build better. Every borrower you empower, every loan you close, every set of keys you deliver is proof that dreams don't have barriers, only bridges.
For Trevisa, it's putting some strength on that bridge, because how you help a broker close a loan, the understanding of the dynamics of that consumer who's now getting older because it's so much harder, who has profiles that we're all trying to figure out, right? When you talk about millennials and Gen Z and their income and all that. And a lot of lenders go, this is just too much damn work. And I don't know if I want to do this because it might not be worth it. I don't know how to manufacture this. Where Trevisa can come in and go, look, let's manufacture loans and let's help brokers get these people across, and let's strengthen the bridge, right? It's going to take us some time. It doesn't happen like overnight, but we know how to do it pretty well.
Join us in building bridges that turn the dream of homeownership into reality. Because at Trevisa Financial, no one serves first-time homebuyers better.
Buddy, and welcome to today's EEP Monday Scenarios. I am so glad to have you here. Today, we are going to have some Q&As in a bit. So for any of you that are new, I'm going to go over a few of the key points of EEP, and then we'll go to Q&A. A little bit about myself. My name is Monique Minaya, and I have been in the mortgage industry since 1997. I have been in all sort of arenas, per se, such as being a broker, retail, wholesale. I've been in all areas of operations, and most recently, I was the EEP production manager for the government entity that I'm going to be giving you some information about. And while there, I definitely played a key role in helping to further develop and refine the EEP process and procedures. I managed processing, closing, funding, the EEP signers at Tule River, and the title approval. And so now over at Trevisa, I'm going to help build and grow your business through EEP. So Trevisa Financial, we are striving to make homeownership a dream come true for everyone. And through homeownership, we are creating wealth with our innovative loan programs, such as our Earned Equity program. What is EEP and how does it work? So EEP is our Earned Equity program. So essentially, a government entity, which is a Native American tribe, the Tule River, they purchase a home selected by your home buyer, and simultaneously, while the government entity is closing on the FHA loan that we provide, your home buyer is going to enter into a home ownership agreement with the tribe. Now, this home ownership agreement has a memorandum that is recorded on title, and so that does help secure your home buyer's interests in the property. The home buyer can make improvements, remodels at their liking. They'll even receive a 1098 at the end of the year so they can write off all of the mortgage interest. Let's look at some of the EEP program highlights. We have 3.5% down for ITIN, non-permanent resident aliens, including DACA. We have low and no credit scores, down to a 580, and alt trade lines are okay. We have 3 months bank statements program. Now this 3 months bank statement can be for self-employed, W-2, and 1099, going up to a 50/60 DTI. We have no source or seasoning for funds to close. I know that a lot of our home buyers just don't have the warm and fuzzies for the financial institutions, and so they like to keep their money at home, whether you want to call it mattress money or money that they are saving in an at-home safe. We definitely will allow those types of funds to close. Bankruptcies are okay. Coming out of a Chapter 7, they can look for the home, put the home under contract. We just require that they show that it is discharged 1 day prior to closing, and it also has to be reporting on credit report. So for the property types, we follow all of FHA approved property types, which is going to be 1 to 2 units, PUDs, condos, manufactured homes. Let's ensure that the condos are FHA approved. And then spot approvals are case by case, but it's definitely been a rough road trying to get a few approved, just because of the fact that there's pretty stringent guidelines from FHA to get those spot approvals through. Seller contributions up to 6% of the sales price. So that'll definitely enable the home buyers to offset their funds to close. So when you're looking at home buyers to qualify, what you're going to be looking for is definitely your home buyers that do not qualify for traditional financing, such as your I-10 borrowers or DACA. But the biggest thing I think for your I-10 borrowers is the minimum down payment is 3.5%. It's 3.5% for any type of citizenship type. So there are those programs out there that require a higher down payment. This I-10 program here with 3.5% down is very unique, very helpful to those home buyers. Also, W-2s. W-2 employees that also perhaps are waiters or waitresses, and they receive their hourly wage but receive a lot in cash tips. Those are really good home buyers to use the 3 months bank statement program for. And then the borrowers that have lower credit scores, we can, like said before, we can go down to 580 and just require 1 major bureau. The no credit scores, let me rewind. So for the minimum 580, we do require 1 trade line. That 1 trade line can be reporting on credit, or if they do not have any active trade lines on credit that are for 12 months and that are satisfactory, we do allow alt trade lines. The no credit score program just need to have 2 trade lines for no scores. And then for verification of rent, 12-month history that is all satisfactory, 0 times 30s, 12 months employment history. If they have longer, it's definitely more beneficial to document it on the 1003 previous employment, but they're only required to have 12-month employment history. And again, that max DTI is 50/60. For assets, if you're not using the 3 months bank statement program to income qualify, we need 2 months bank statements to show sufficient funds to close. Gift funds are allowed as well. And in addition to the standard FHA loan fees, the entity does have their own closing costs. In addition to their first payment is required to be paid upfront at closing. So I wanted to get into a little bit more about the self-employed borrowers using the 3 months bank statements. There is a standard expense deduction of 45%. Although we do understand that sometimes we have those borrowers that maybe they don't have any employees, they are service business versus product business, and so they don't have very many supplies that they need to purchase. In that case, we can look at the tiered ratio program in lieu of the standard 45% expense. This will allow anywhere from as low as a 10% expense ratio. And the documentation for that could be anywhere from a CPA letter, something online, or internet documentation that just gives us more information on how we can identify their type of business. So as mentioned before, the Travisa earned equity program and the 3.5% down. Again, I had mentioned the difference between 15 and 20% down lenders. They do also have the bank statement program, but where ours is 3 months, they are anywhere from 12 to 24 months. DTI is much more competitive at 50 over 60 versus 43 standard. And if you do want to go up to 55, you're looking at comp factors. Credit is huge, huge. 700 plus credit scores versus a 580 credit score with only one bureau. We have a lot of support to help you with EEP. We have our dedicated online email address, which is eepquestions@travisafinancial.com, or we have our dedicated phone line, 877-888-ASK-EEP. You also have your account executives, Norma Summers and Ben Slayton, who are always available to assist you. All right, everybody, thank you so much for coming. We have our EEP Thursday webinar, and so I look forward to having you join us there. Thanks so much. Have a great day. Bye-bye.